Trade with the trend. Whether you're a beginning trader or a seasoned veteran, it doesn't matter. No doubt you heard it plenty of times. If you want to be successful, you have to trade with the trend. Uptrend, you look for buy signals. Downtrend, you look for sell signals. No trend, you don't do anything. Sounds simple enough until you get into the specifics of it and you start to find out that defining a trend in itself is a little bit of a complicated mess. Let me show you what I mean. Let me get myself out of the way here. Somewhere around here. There we go. Here I look at a daily chart for the British pound yen. It's only price, nothing more. It's kind of easy to tell right off the bat that the market has been going up. And you can tell that simply by looking at the direction of where this is actually heading. And it's been that way for quite a while. There you go. But in order to really know where the trend is at, you need to be able to define a few parameters, like when is the trend slowing down? When might the trend be reversing? Is this a possible reversal here? How do we know? Well, in order to determine that, it is globally accepted that you rely on a concept called trend lines. Trend lines have their own specifics. For example, you need anchor points. And the anchor points have to be a minimum of 2. They must include the wicks of the candle. You must look for the low highs for an uptrend and the high lows for a downtrend. The line must be drawn below price for an uptrend, above price for a downtrend. When you really look at it, it sounds easy and simple enough, but it really isn't that easy, that simple. Let me give you an example. I'll take a diagonal line. Where am I here? Right here. I'll take a diagonal line, and now I need to look. Where was my recent? Well, the lowest high. So do I start here at this level? Do I start here? What do I do? Do I start here and move it all the way? It's confusing. Let's see what we get. I start here, and I need a minimum of 2 anchor points. So we have this roughly right here, which now means this area right here would be a reversal of trend. Price looks like it's starting to go down. But if I were to use, for example, these 2 anchor points right here, well, I now get a completely different type of schematic. And if I were to look at this point here, remember, wicks need to be included. And I need to look for 2 anchor points, maybe this one, or this one, or maybe this one. Okay, let's try this one. There. I'll put it right there more or less. Look what you got. Now, based on this long run, price trend is not reversing. We're still in an uptrend. We just have a reversal of a retracement of some sort. This is getting a pain in the butt, and you have to do that for every commodity or every currency pair that you want to trade. There has to be a simpler solution. Well, there is. And I'm going to reveal it to you right here, right now, and I'll make you an expert trend trader in 30 seconds flat. Guaranteed. I know that's big talk, but I'll deliver. You watch and see. Having nothing but price on our chart, we use a very common indicator that exists on any trading platform, because what I'm about to show you, you can do on any trading platform for any commodity. Doesn't matter what you trade. I'm using MT4. I trade Forex, MetaTrader 4, but like I said, it works on anything. So I go and use moving average. I set this to 1 144. You heard me right. Period. 144. Exponential. I pick whatever color you want. The same with the width of the bar of the line. Click on OK. There you are. My trend line has just been drawn on the chart and it gives me crucial information. First of all, price is most definitely still above. So we're still in an uptrend, no matter what is happening here. Because when price is above the 144 EMA, we're in an uptrend. Price is below the 144 EMA, and we are in a downtrend. Price goes through the 144 EMA, and we're going sideways. It's that simple, it's that easy, it's that straightforward. Not only that, I told you I'm going to make you an expert in 30 seconds flat. Here you have crucial entry points, and I'm going to add something to it that will also give you clear exit points. For example, we are currently in an uptrend. As I showed you already, price is above the 144. Every time a bar retraces back to the 144, but does not close below it, and then starts going up again, that's an entry point. And look what you would have had for a run. Look at this. Any place, let me choose a different color. Here again, it hit the 144, but it did not close below. You would have entered on the next bull bar. And look at this. And the same here, and the same here, and more than likely, same here. How nice is that? Clear, simple, straightforward. Now, you're in a trade. You took one of these positions that I just indicated, and you just let it run. Just let it run. Now you're saying, well, how do I know now when to exit this? We're going to add yet a second moving average, and that one too is common, works with every trading platform, is available on every trading platform, and it works like a charm. Same thing. We go to our installation, and I click on moving average again, only now I set it to 12. And I change the color so I know where I'm at. I'll pick yellow. I'll make the line width is fine. Click on OK. And now watch, well, I should have used a different color. It's not too clearly visible. Let me go here real quick and change the color to something that is a little bit easier to see. Here, I'll use tomato. I don't care. There. It's only, you see this? Now, how does this work? Very simple. If I enter an order, buy order, above is buy, below is sell. Now let it run. Let it run. The moment there is a bar that closes below the 12 EMA, like right here, or right here, or this long one right here, you exit the trade. Get out. There's no need to think about it twice. There's no need to wait until this goes completely below the 144, and now you know for certain that you're starting either on a flat trend or a downtrend. No need to wait, because that would have been all part of your loss right here. The moment when you're in a buy trend, the next bear bar closes below the 12 EMA, you exit. The opposite is true for sell. You're in a sell position. The moment a bull bar closes above the 12 EMA, you get out and close your position. And it literally is a rinse and repeat. I entered here, I went up, this closed below, I get out. Now I'm flat, I'm not really doing anything, although I could take it according to my logic, but that's okay. I enter it again, and I stay. And I just keep going. Here is a really nice run. I enter it in here. I go up, and I just stay. This touched. It didn't close below, so I stay. This touched. It didn't close below, so I stay. Here it closed below, and here is where I get out. And I had a nice little run here. This is how you trade the trend. There is no other need for any other tool. There is no other need for any other sophistication of learning trend lines and keeping track of anchor points and make sure the line is defined properly. This is as easy and as simple as it gets. And if you follow just that, nothing more, you are now way ahead of what most traders use, and I hate to say it, fail at. So now, why the 144 and why the 12? Well, it's actually very simple. The 144 is really a Fibonacci number, which are common numbers that are found anywhere on planet Earth, even in nature, and they're globally accepted as being numbers, parameters that have real meaning in life for very specific reasons. In finances, the numbers are really a reflection of certain conditions in markets, and that has been proven. You don't need to take my word for it. Go do a little research, Google, use AI, ask them, and you'll see that what I'm telling you is true. So, why 44 though? I'll stick with it. Well, normally institutional traders rely on 50 and 200, and that's also globally accepted. There is a problem with that. Number one, the 50 is not an exit indicator. It is a trend indicator, but it's too fast moving, and so you get far too many whipsaws. The 200 is most definitely a trend indicator, but it is too slow. And now you may be entering far too late. And if you wait for price to cross below the 200 when you're in a buy or above the 200 when you're in a sell, you are giving up a lot of your position because the 200 is that slow. Turns out that the 144 EMA, a Fibonacci number, happens to be the sweet spot. It is not too slow, it is not too fast, it is just right, and as you noticed here, it took care of an awful lot of whipsaws that we otherwise would have had in 50 EMA, and that would have turned out into more than likely losing trades. Now you have a clear vision, you know exactly where you're going, exactly what you're doing. Why the 12 EMA for our exit point? Turns out that the 12 EMA is also one of those little secret gems that you don't hear about, that nobody talks about. It actually mimics the MACD, the diversion, the zero baseline of the MACD. So I could, let me show you what I mean. I could add a, make sure I'm setting my mouse here, there we go. I could add the MACD here to this particular, and well, I have it set to the fast signal, but for now that's okay. Normally those settings are different, and I'll talk about this in a second. So you go click on OK, here's your MACD. Now, they'll have you talk about when the line is up here and the line goes there, and check if you have a divergence, and I don't know what else. Doesn't work that way. It's very, very simple. You have here 0, which is the baseline. If the price is above the baseline, price is above the 144, you have an entry signal. Price dips below the baseline, price is below the 12, you have an exit signal. Reverse, price dips below the 144, price is below 0 baseline, you have an entry signal. Price is above baseline, above, reverses back to above 144, and you have an exit signal. Rather than cluttering your chart with all sorts of different indicators, you can keep it if you want to, but you don't need this MACD. You can simply remove it, and instead you use the 12 EMA. Oh Lord, come on now. And instead you use the 12 EMA that I drew on chart here. Makes it a little easier to see. You don't have to constantly go bobbing your head up and down or your eyes up and down to keep track and check and verify. It's as simple as you can be, It's as easy as can be. Like I said, an expert trend trader in 30 seconds flat. And That is really it. Now, in the next video, I'm going to show you how you can absolutely be 100% guaranteed that if price is above the 144, you actually do have uptrend, and you should be looking for only buy signals, or the reverse, price is below the 144, you are actually in a downtrend and you should be looking for only sell signals. That will come up in the next video, which I'm hoping to post tomorrow. So this is it for today. You are now officially an expert trend trader, whether you believe it or not. Go try it out on your charts and see how quick, easy, and simple that really is. This is Load with Black Bear Dog Trading. As always, thank you for being here. I truly appreciate you being part of my team, and I'm glad that I got to share this with you. Before I go, one more thing. I started a new platform of sorts, a new forum, call it what you like, and that is where you, my viewers, get the chance to ask me any trading question you like, free of charge, 100% free of charge. I will review the questions I get every week, and the one question that I think will benefit viewers the most overall, I will make a video about and answer that question right here on YouTube. And of course, the individual that submitted that question will get full credit. I will most definitely give you your props. If you want to participate in that, I'd love to have you. All you need to do is go to my website, and let me show it to you. blackbeardog.com. And as soon as you get there, here, so I'm not playing any games here. As soon as you get there, Black Bear, here we go. As soon as you get there, that's all you got. This is my entire website. I am not selling you anything here. I'm not marketing anything here. Simply as that. You have a question for me? Get your answer. Click here and you'll get a tiny little form. Fill it out and click on Let's Solve It. And I will send you, and like I said, I will review all the questions I get once a week, and I will make a video about it, give you your proper recognition, and again, free of charge. I think many viewers will benefit from that, as opposed to me putting up videos that I think you want to see, that I think you want to hear or know about. So I blabbered enough. Again, thank you for being here. In the next video, we'll take this expert trend trading method up a few notches. Until then, take care, and as always, God bless.